morning. You're watching the trade setup on BloombergQuint, and I'm Alex Mathew. The signs are pointing to another topsy-turvy session in India's equity markets. Let's take a look at what some of those cues are. First, the new COVID-19 strain continues to roil markets globally. That's because the vaccine rollout is not keeping pace with the spread of the disease, and several countries have started imposing restrictions. The latest is that more infectious strain that has emerged from UK has likely crossed into Germany, France, and Switzerland, and Ireland has already imposed new restrictions to stop what has been called an extraordinary increase in cases. But the big news overnight is somewhat unexpected. We told you earlier in the week that the US Congress had passed the relief package that's meant to counter the effects of COVID-19 on the economy there. Well, the latest is that President Donald Trump has indicated that he may not sign that relief package into law. In a video on his Twitter account, Trump said that the bill included wasteful and unnecessary items, and he also demanded that lawmakers increase the amount of money that is paid out to individuals from what he called the ridiculously low amount of $600 to $2,000 and $4,000 essentially for couples. And crucially, the aid package is attached to a $1.4 trillion measure to finance government operations until September. And if the president does not sign it, government funding would lapse on the 28th of December. So they would either have to go in for a stopgap bill like they did over the weekend, or in fact, there would be a government shutdown. And there is a quote, in fact, that is attributed to Donald Trump. He's saying that he has asked Congress to amend the bill and send him a suitable bill, or else the next administration will have to deliver a COVID relief package, and maybe that administration will be him, and he will get it done. So there is a lot of uncertainty that is roiling that market right now. In fact, let's look at how the US markets panned out. They did end mostly in the red. You have a couple of the benchmarks that ended in the red, but you had the NASDAQ that managed to end positive in yesterday's session. But indications are that it would be a negative start on later today, that is in today's session, because the index futures are indicating cuts of about 0.5% each at this point. Let's also look at the Asia Pacific region as of now, and quite a few of those markets, interestingly, are shrugging off this uncertainty about US government funding. And most of them, as far as what I've seen, have started in the green. And there is quite a bit of positivity in those markets as we speak. In fact, there you have it. You have the Hang Seng index that is trading about 0.2% in the green. You have the Kospi that's also trading positive. Earlier in the day, you had the Nikkei 225 that was trading flat. It is now trading with gains of just about 0.1%. So not significant gains, but at least there is a lot of green on the screen as far as the Asia Pacific markets are concerned. Let's take a look at the SGX Nifty then and see what it's indicating. It hasn't been the most reliable indicator because, it never really pans out the way it's indicating. But as of now, the cuts have actually increased, and it's trading with cuts of about 0.4%, which indicates that there could well be a bit of a muted start for the Indian markets. But let's look at some of the other factors that have come into play both yesterday and today, going into today. Yesterday, of course, the India VIX cooled off significantly from the highs that were seen at the start of the week. In fact, a 5 percentage point cool off in the VIX is what we saw. Interestingly, FIIs continued to buy after that hiccup on Monday, while DIIs went back to their selling ways. So FIIs bought as much as 1,153 crore rupees worth of equity on a net basis, which was actually surprising to a few people because there was an expectation that there would be a change in the trend that we've seen since the start of November, but that hasn't come to pass. And DIIs have gone back to selling. They've sold a net amount of 661 crore rupees. Now, what is likely to happen today is that the defensives will continue to be in focus as uncertainty prevails, not just here, but also globally. And IT and pharma were really the leaders in the pack yesterday. They could well be the leaders of the pack today as well. The broader markets have clawed back some ground, but they have continued to underperform. And that could well be the case today as well. What about a few stocks to watch then? We've got Bajaj Auto in the auto pack, which, well, unfortunately didn't do too well yesterday. But the update as far as Bajaj Auto is concerned is an increase in capacity that is planned. They've signed an MOU with the Maharashtra government for a 650 crore factory, and the plant is expected to be commissioned and will start production in 2023. It is expected to be utilized to manufacture their high-end KTM motorcycles as well as the Husqvarna and Triumph motorcycles. It'll be interesting to see how much is produced in that facility. Remember, their facility in Chakan already is used to manufacture KTM, in which they are, well, close to a half ownership. They have close to a half ownership in KTM, and that business is doing quite well for them. Electric vehicles will also be manufactured in that facility. There's also a major deal with regard to WIPRO, and that could actually bolster sentiment for this counter. Already, IT companies, like I mentioned, have been doing quite well for themselves. In trade yesterday, they were the leaders. WIPRO has said that it signed a $700 million deal with Metro AG that could rise to $1 billion over the lifetime of the deal. So that's quite the positive. Wipro will take over the IT units of Metro AG in Germany and Romania, and will also take over employees in India. So that's more or less how we're set up for trade. Of course, there's a lot more that will come up over the course of the day, and you'll find all of that on the website, BloombergQuint.com.